Hello all, welcome back. This video is a continuation of the last one, the earlier video, in which we discussed about ETFs, like what are ETFs, advantage of ETFs, comparison between ETF and a mutual fund, taxation on ETF and various other things about ETFs. So if you haven't watched it, kindly do watch it before you continue with this video, as this is a continuation part of it. Now let's gonna see few top performing ETFs, like historical returns of those ETFs, as well as let's find out how to analyze an ETF before purchasing it. Before we proceed further with our analysis, we should know the indices which are listed on exchanges, because all the ETFs which we're going to discuss today are all equity index ETFs. So first tell me, what is an index and why do we need it in the first place? To measure the performance. Like, it's very easy to measure the performance of a stock using its price. Whereas if you want to measure the performance of overall market or any particular sector, how do we do it? There are hundreds of companies listed on exchanges and it's practically impossible to track all the companies. So an index is required. An index represents a group of stocks which have some similarity. Like, similarity can be in any sense. Like, an index can represent top stocks of auto sector or IT sector or banking sector or pharma or any other sector. Or similarity can be in this sense, like an index can represent top 50 stocks, like the largest 50 stocks listed on our exchanges or largest 100. So similarity can be in terms of size also. So generally an index represents group of stocks which have some sort of similarity. As stocks have price, even indices have prices. Like, stocks price keep moving up and down, even index prices keep moving up and down based on the stocks, based on the performance of stocks in that index. Now let's look at few top indices listed on our exchanges. The first two are Nifty 50 and Sensex. I think most of us are aware of Nifty 50 and Sensex, or at least you would have heard of it. What is Nifty 50? Nifty 50 is an index which represents the largest 50 stocks listed on our exchanges. So largest in the sense with respect to their market capitalization. What is market capitalization? Market capitalization is the perceived value of a company. Every company has got some value, and the value is not on actual terms, but it also includes the future value. So it's a bit tricky. For now, let's understand market capitalization as total value of a company. Okay, now let's come back to Nifty 50. Nifty 50 in the sense the top 50 companies with respect to market capitalization. Then what is Sensex? The top 30 companies with respect to market capitalization. So the top 30 companies in Nifty and Sensex are same. As we are calling these companies as top companies, largest companies, there should be a name to it. These are called large cap companies. Large cap companies in the sense whose market value is more than 20,000 crores. Similarly, there are mid cap and small cap companies. Mid caps in the sense whose market capitalization lies between 5,000 crores and 20,000 crores. If company's market capitalization is less than 5,000 crores, then it's called a small cap company. Till now we have seen Nifty 50 and Sensex, two indices. Let's go to the third one. The third one is Nifty Mid Cap 100. As the name suggests, this index consists of top 100 mid cap companies listed on our exchanges. So what is a mid cap? As we have already discussed, whose market capitalization lies between 5,000 crores and 20,000 crores. Next index is Bank Nifty. This index represents top 12 banks listed on our exchanges. Top banks in the sense SBI, ICICI, HDFC, Kotak, like all these are the topmost banks in the country. So this index tracks the performance of top banks. Similarly, there are other indices like Nifty IT, Nifty Auto, Nifty Pharma. Nifty IT tracks top IT companies, Auto tracks top auto companies, Pharma tracks top pharma companies, and similarly there are indices for almost every sector. Now that we have understood what is an index and various indices present on our exchanges, let's proceed further and analyze top ETFs in the country. Here we have considered few top performing ETFs in our country. The first one is Motilal Oswal Mid Cap 100. This is the ETF which invests our money in top 100 mid cap companies in our country. This fund has given a return of 68.37% in last 1 year, an annual return of 18% in last 3 years. 68.37% is very high, and we cannot expect the same return every year. This is because of after COVID drop, markets have rallied. So that's the reason we have achieved so much of return, but we cannot expect the same return every year. Whereas 18% is a reasonable return. That's the annual return in 3 years. Whereas Nifty Bees, which invests our money in top 50 companies, Nifty 50 has given 53% return in last 1 year and 18.75% annual return in last 3 years. Bank ETF has given 62% in last 1 year, whereas around 13% in last 3 years. This is comparatively low, though 13% is a very good return, but comparatively low. But then why we have selected this ETF is because of scope, banks scope to perform in the future. There is a lot of scope for banks to perform. So that's the reason we have selected this ETF. Like, we cannot say that all the ETFs which performed in the past will be able to perform in the future. It all depends on that sector, on that company. But like, we can only analyze using the data we have. So bank ETF is selected not based on the historical returns, but their scope to perform in the future. The next one is HDFC Sensex ETF. These are top 30 companies. This has given almost similar returns to niftybees, around 55% and 19.65%. The last one is Motilal Oswal Nasdaq 100. This is a ETF which invests our money in US listed stocks, like the tech stocks of US, Apple, Tesla, Google, Facebook. So this has given around 38% in last 1 year, comparatively low compared to the other 4 ETFs, whereas it has given around 26% annual return in last 3 years. So this is very consistent. So this is one of the reasons why we have selected this ETF as well. This is one of the reasons. Then other reason is this acts as diversification. Like, otherwise, if you're only selecting the ETFs which invest their money in Indian stocks, this is a bit dangerous, because you're putting all your money in one country. So if that country cannot perform in the future for some reason, then your money is at stake. Whereas if you are investing in some other country, that to a developed country like US, like, you are diversifying investment. Though if India doesn't perform well in the future, like, at least part of your investments are saved. So this is a very good instrument for diversifying your investment. Also, it has given a consistent return. So this is a reason why we have selected this ETF. And now we have seen returns, like 1 year and 3 year returns. Like, how do we choose an ETF? So we can basically choose ETF based on a sector. Like, if you have got some idea about which sector to choose, like, there is something called sectorial rotation in the industry. Like, one sector performs for maybe 2-3 years, then it takes a pause, then other sector starts performing. So if you are aiming for short term, so, and you are aware of sectoral rotation, then you can choose a sector ETF, like banking ETF, pharma ETF, IT ETF. Otherwise, if you are investing for long term and you are unaware of sectors, like which sector is going to perform in the future, then it's better you choose ETFs like niftybees or nifty midcap 100 or Sensex ETF or Nasdaq 100 is a different story. Let's consider top 4, like midcap 100, niftybees or Sensex, because here it's this ETF is grouped based on their size and not their sector. So this will have a mixture of almost all sectors. So things here to remember are, first thing is the ETF, kind of ETF to choose. Like, what's the ETF you're gonna choose? Is it based on sector or based on company size? The next one is yearly return, and the next one is whether returns you're gonna get are consistent or not. So considering these 3 factors, another one is expense ratio. Like, almost ETFs have got very low expense ratio compared to mutual funds, so you can ignore that, or you can once check the expense ratio also. So whichever has the lowest expense ratio, like each like niftybees, there are various ETFs in Nifty Bank. So which one has the lowest ETF expense ratio, you can select that ETF. So based on these factors, like first one, if you are aware of sector, you choose a sector which is going to perform well in future. Then consider their yearly and returns and 3-year returns, if possible 5-year returns also, like to check the consistency. Then the expense ratio. Considering these 3 factors, you will be able to select a best ETF. Hope all of us have understood about ETFs and seen historical returns of few top performing ETFs, and I think you are now aware of analyzing an ETF before purchasing it. So this is all about ETFs. Just to mention that many have been asking about operational procedures, like step-by-step procedure in buying a stock or in purchasing an ETF or in purchasing mutual funds or how to apply for an IPO. So we're gonna do separate set of videos where we show you step-by-step procedures in buying a stock. Like all these things will be covered. So kindly follow our channel to find out more. Please like the video if you really liked it. Also comment in the sections like if you got any doubts or any suggestions to us. Also kindly subscribe to our channel. More videos to come, more related content to follow, and also share with your friends. Somebody out there might need this information, so this would really help them a lot. Thank you. See you again in the next video. Till then, happy investing.